The global stock slump deepened on Monday while bonds rose as traders refrained from taking big positions. And this comes ahead of a historic test of the US export model from Donald Trump's tariffs expected to set in on the 2nd of April, just days from now. Global stocks sold off from a fourth day on mounting concerns about the economic impact of a global trade war. From Sydney to Hong Kong, stocks dropped with the Japanese Nikkei sinking to the lowest level in more than 6 months. Taiwan's benchmark was on course for a so-called correction. Equity index futures for the US and Europe slipped. Investors remain wary about the announcement of the so-called reciprocal tariffs and the impact on the economy. Trump said he plans to start his reciprocal tariff push with all countries. Trump clamped down speculation that he could limit the initial scope of tariffs set to be unveiled on the 2nd of April, depending on the scale of what's announced. Economists see scope for a hit to US GDP and a jolt to prices over the coming years. This is based on the possibility of massive tariff hikes on imports from some countries. Then in commodities, crude prices swung between gains and losses. The market weighed Trump's remarks on the threat of fresh penalties on Russian crude if his counterpart Vladimir Putin refuses a ceasefire with Ukraine. Brent's June contract slipped towards $72 a barrel after a marginal gain at the open. Gold started the week with a fresh record high on safe haven demand. Bullion edged higher to top $3,093 an ounce, beating the previous all-time high set on Friday, when it recorded a fourth weekly gain. And for more on this, I'm now being joined by Anand K. Rathi, the co-founder of Mira Money. He's joining me live from Bengaluru. Mr. Rathi, thank you so much for joining me here on World Business Watch. April 2nd is right around the corner. These reciprocal tariffs are expected to kick in now. What's your take on the impact on the Indian stocks, which have shown a small recovery recently?
I think the next couple of weeks are going to be very, very volatile. A lot of news will flow in. So in our view, it is better for at least for traders to stay away from the markets because we do not know what will happen overnight. The sectors that I think will primarily get affected is auto. Some gems and jewelry companies will get affected majorly because of the impact of reciprocal tariff. Primarily because we don't know what kind of texture the commentary will take. While the industry body says we may get hit by about 3.5% in terms of exports to the US, we believe it is better to stay away, watch for some time before we take any big trading call at least.
Anand, also when it comes to Indian stocks, what's your overall outlook for the impact on them amidst the uncertainty?
In general, equity is always, bound to have volatility. I mean, this year it is all about Trump. Last year it was someone else. 2022 it was Putin and so on and so forth. So in our belief, volatility and equity will always go hand in hand. Our belief, though we believe that in the shorter run, it is better to spread your money over a period of time and not go all in into equity, Indian equity at this point in time, though the valuations are looking decently attractive. The tariff impact can be seen maybe in the next month, maybe in the next quarter or so. So it is better to spread your money over the next 100 days than invest everything at one shot and see your portfolio down by another 3-4%.
Also, Anand, if we look beyond the short-term impact from these tariffs and, of course, global uncertainty, what's your outlook for Indian markets as a whole?
Indian markets now clearly have to depend on the corporate earnings. If the corporate earning, which is a little slow last year, the growth was only about 5%. If they show some kind of projection that, okay, we are back to double-digit growth, the GDP is looking good, which I think will happen, we should be able to see about 30,000 levels of Nifty in the next couple of years. So we are positive in the medium to longer run. In the shorter run, which is very, very short, 3 to 6 months, it's very difficult to predict. So we believe even this year, if you could touch the all-time high, the number that we saw in September 2024, that itself is a big achievement for us. But overall, in the medium to longer term, we definitely are looking good because India's GDP numbers are definitely looking good. The consumption the consumption play that the budget has done should start kicking in. RBI is also coming around the corner very strongly. So these three, four factors should help India's GDP to boost up, and so the corporate earnings should start showing some good results.
You mentioned RBI. Any expectations for RBI moves going forward?
Yeah, inflation was sticky last year, if you actually see. But if you see, the food inflation is almost closer or below 3%, which I think will continue for some more time. If the monsoons are good, I think the food inflation is more or less in control. And RBI only can do so much. They cannot do more beyond a certain point in time on controlling inflation. So our belief is that this year, and by the looks of the new RBI governor, I think we may actually see one more cut in April, because they want to bring in the animal spirits back. They want the corporates to start expanding and the capex to go up from here. So I think in the April, which is next week when RBI meets, we should see a cut of about 25 basis points. And this entire year, we may see another 50 basis points cut. I know it's a little aggressive, but we believe from here, 75 basis points can be expected to be cut by RBI in itself.
All right, that was Anand Rathi, co-founder of Mira Money, joining me from Bengaluru. Pleasure speaking with you.
Thank you.